The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 10th. Today the 10th? Yeah, today's the 10th. Fantastic Friday. I know that much. It is fantastic and fabulous Friday. So welcome to the Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us today. You and I, we're going to go figure out what the market is throwing at us. We're going to go see what the bulls and the bears, the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to call in. Now is not too early at 877-927-6648, internationally 727-445-1044. Let's go ahead and get this show kick-started off on fantastic and fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have Dow trading down 107 points at 17,876. S&P off 17. She's trading out at 2098. NASDAQ Composite off 53 points, trading at 4905. Russell down 13 points at 1167. Gold is flat. It's up really a buck, trade at 12.73. Silver's up 2 pennies at 17.29. Light sweet crude back $1.27. That's trading at 49.29. Leading the charge here, dollar-wise to the upside, you've got Eagle Pharmaceuticals up 35% out there. That's up $14. Axial Corp, 25% to the upside, up $6 Rudies. Walgreens Boots Alliance up 4.5%. That's up $3.70. Global Blood Therapeutics up 15%, $3. Vail Resorts having another nice day out there, up $3. That's 2% to the upside. H&R Block doing well, up 12%, up $2.50. To the downside, Priceline, the usual suspect, dollar-wise at least, to the downside off about $20, 1.4%. BlackRock, which really BLK pretty much follows the S&P 500, nonetheless is off 10 bucks. Amazon down 10, Tesla's off 8, Google's down $8. So where do we begin the day out here with regard to what the markets are doing? I think what I want to first do, we'll go take a look at multiple time frames out here. But what I first want to do is I first want to be able to set for you the longer term picture. And then within the longer term picture, what we've got to try to do is figure out how to navigate that. So the longer term picture, now it's an interesting day here inside of the New York Stock Exchange. Let me actually, well, maybe I can do this. Yeah, let's just start here, New York Stock Exchange. So as we take a look at it, I'm going to blow this up on our screen just a tad. And this created, believe it or not, an island top. Now, what I'm referring to is if you look at the trading session, the high from June 3rd, so I'm going to give you both the bullish and the bearish, and what it is that we're going to look for to confirm my thinking with regard, not really my thinking, what the charts are telling us. So the first thing is, what is today's action telling us? Well, if you look at the high from June 3rd, that number is 10,504.46. The low of the following day was 10,508.49. Visually, you don't really see it, but I'm more than a visual guy out there. So I knew that there was a gap. And today, we've gapped down below the low of, or it has gapped down below the low of June 6th. That says that creates the last 1, 2, 3, 4 sessions have created that little island top. Now, why is that important? Well, number one, first, it's a bearish pattern out there. It's a very bearish pattern. Has the trend changed inside of the New York Stock Exchange? Well, let's go take a look at the trend. Let's go take a look at off of the lows from February, and then your first touch point out here with regard to the trend is going to be the low from May 19th. So no, the New York Stock Exchange is still in an uptrend. What does that say? It says more likely than not that rising trend line is going to be the first area that gets tested on a market that continues to move lower. If the trend line gets broken, that says you're going to go ahead and likely move back into the May 19th level. So we've already given ourselves a little bit of downside action as to where the market is going. We've also got that nice inside the New York Stock Exchange. Some people are in love with it. We just use it as one of our tools to try to understand what's going on with kind of the U.S. global type market out there. So we know we've got an island top. Why is that also important? Because what I'm going to show you next with regard to the New York Stock Exchange says the markets are going to move higher, that this is not the top. For those of you that are planning on a major top out here, it's not here yet. And I'll show you the set of tools that says that. And it also pertains to the New York Stock Exchange. Now, we'll know whether that conclusion has got legs or not, or has merit, if in fact we see the highs here from June 8th get it taken out, because there is nothing more bullish than a failed bearish pattern out here. This is one of the more favorable, I shouldn't say favorable, it's one of the more unfavorable bearish or favorable bearish pattern out there. That's kind of like a oxymoron. I don't know what that is. It's a double conjunctive something or other. But the bottom line is this is a very bearish pattern. If it gets taken out, nothing more bullish. Now, why do I say longer term that the New York Stock Exchange is going to go higher? Well, I say that by taking a look at this page right here. So I just created this page before we came on the air. Now, the bottom, this Panel 1 is the New York Stock Exchange. You probably figured that out. Panel 2 out here happens to be the advanced decline line inside the New York Stock Exchange. We've talked about this over the last couple of weeks out here. You can see that as of yesterday, not today obviously because we've moved lower, that it's an new all-time highs out there. Now this is summation index, but it's an all-time highs out there. Now, the bottom panel is that McClellan oscillator that we take a look at for advancing and declining issues out there. And when we take a look at it, what this actually did, and I wrote about this in my newsletter 2 days ago, was that be careful what you wish for, because on June 8th, as the New York Stock Exchange was making that high, what we see here was an oscillator reading of 150.80. If you're watching us on Tiger TV, you look in the upper right-hand panel. That's my data box, and you'll see where it says McClellan oscillator, and says it's 150.80. When you get to 150, as soon as you get there, that tells you that you've got a market that is overbought. It's a great tool for helping you understand kind of a general principle with regard to the overall market and what's going on. 150.8, it's above 150. Now, the last time we saw getting above 150 was right back here on February 17th. Actually, it was before that. It was got to plus 150 on February 17th. And that reading there was 195. Certainly above 150. If it had gone on above the zero line, right now we're down below the zero line. In this case here, where it went on to make higher highs, markets don't end on that. Even when this oscillator reading starts moving lower, it's kind of like working out. You eventually get it mathematically, it gets to such highs that the oscillator has to fall, even though price is going to continue moving higher out there. My point is that when this high was being formed out here a few days ago, it was already communicating to us that there was going to be some kind of pullback. Didn't mean right away, but it got to that reading where you say you got to be careful out here. Now, I didn't get into the reason yet why these markets still want to go higher out here. And we're going to do that when we get back from this break. We'll go look at the 2007 high. It works this way with other highs along the way as well. There's a very common pattern. That is not in play here as we speak right now, like it was in 2007. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 95, S&P is down 15, and what we're doing is we're taking a look at the markets and first just stepping back to understand where are we on, we'll call it a little bit longer term scale. What has been the message of the markets over the past couple of months out here? And we begin by taking a look at the New York Stock Exchange. So here's one thing that we know. New York Stock Exchange today has formed an island top unless there's some huge comeback. There could be, but at this stage here, we've got an island top, and that says that the highs from a couple of days ago are going to be very important for us to watch if those get taken out. They will confirm the following message, and the following message is this. See here, we've already established that with regard to the advanced decline line, new all-time highs. And at the same time, when we take a look at the advanced decline oscillator, it also was moving higher, got to the overbought condition of plus 150. Now, when you get to 150, it also offers us the promise of higher prices eventually after that overbought condition gets worked off. I didn't anticipate that we would see it go from overbought into the below zero level. So it may be getting down to an oversold. That's not there yet. Maybe doing that rather quickly. So that is that. In fact, that's what today's session to me looks like is going to happen. Now, where does it have to go? But let's step back for a moment because I don't want to get too confused. I want to show you the pattern that is associated with major market tops inside of the marketplace. We're going to go back. We're going to take a look at 2013 and 2007. It's our most recent top out here. We're going to take a look at the same indicators. And folks, I'm not just cherry picking here, but I'm going to many people are out there thinking that we're at or very close to these, all because we've gotten back towards the highs out there that, we double top, we're at a major turning point, inflection point, and the markets are moving lower. And this is nothing similar to 2007. See, if we take a look at the advanced decline line, let me just go ahead and blow this up here a bit. Inside the NYSE, here's the advanced decline line. This is the panel that I just blew up, number 2 out here. What was it doing? It was moving higher as that first high was made back in June, July of 2007. Look at where that line, you can see how it was moving higher out there. In fact, it actually peaked, quite frankly, and that's important for you to know. It peaked right around June, I'm not going to give you the exact date, June 1st, June 2nd, 2007, right? It peaked out there. That was the advanced decline line. Then what did it start doing from there? It started making a series of lower, we'll go ahead and get the the drawing tool out here, right? It started to make that a red line. It started making a series of lower highs out here. That's the advanced decline line. That's one of the first things that you take a look at. Now let's go ahead and pull this back. Make it a bit smaller. Let's take a look at the price area, because we know that from a price standpoint, market made a nice high. We had a big, huge pullback. I was short, by the way, at that time, and had a nice big pullback right here on August 16th. I ended up flipping to the long side on that day. I remember people were like, what? As the market was moving lower. But that's a whole different story out here. What I want you to really pay attention to is I want you to pay attention to what the market did was it made a slightly higher high back into that October 11th timeframe. So price had moved to a higher high. The advanced decline line was not confirming that, but also not confirming that. And just as important that you would see is that the advanced decline oscillator out here was doing what? It was actually, as price was moving, there was no diverging pattern. That's really what's key. There was no diverging pattern. Well, that diverging pattern showed up, okay, right here. If we take a look at it, it made an actual peak where that divergence above the zero line. See this yellow line here? That's zero. That's really key. The divergent patterns that you're looking for want to either occur above or below the zero line with regard to that oscillator reading. We'll take a look at it. It was doing what? It was making also lower highs coming in to that price level of the October 11 timeframe. As soon as it went down below zero, that in essence was your message that it was time for the market to start heading south. You go ahead and fast forward to where we're at today. Do we have those patterns in play? We do not. You could go take a look at what was going on back in March of 2009. We just happened to be there. And what you can see here, see below zero, take a look at that nice little oscillator reading. What was it doing? It was making higher lows out there, right? Price was making a lower low, as we know. And guess what the advanced decline line was doing? It was also making a equal out there, an equal type low. It was not making lower lows, confirming price. Those are the types of diverging patterns that you will see at either significant tops or significant bottoms. Do we have that now? No. Can things do what they want to and do a freak out, do something different? Of course, I'm always open to the fact that they can. Do they typically? No. These are patterns. I'm a pattern recognition person, specialist, whatever it is that you want to call it out there, and always looking for patterns so that we can understand what's going on. Now, we'll get confirmation when we see this island top get taken out, if in fact that it does. I do anticipate that we will. I believe that what we're looking at here is a quick pullback. Maybe more than today, may last for a few days. I'm open to that right now. The message here in the New York Stock Exchange is that it wants to head lower. I also created this new indicator last night, by combining the New York Stock Exchange along with the NASDAQ Composite into one summation index, one oscillator reading, which is right here. And right now, its message is below zero, and says we see further pullback. May not be real deep or steep. You never know out here. Last time we saw it move below the zero, the combined indicator was April 29th. Of course, we saw a low come in back on May 19th, so it lasted for a couple of weeks from a trade. Price really never got that far to the downside, but nonetheless, it was an indicator of lower prices to come. Now, in order for lower prices to come, we need to start seeing a couple of failed patterns. So I've just set the stage with regard to the bigger picture out here. With regard to today, it's really an interesting session, because the Dow being the top line number down, 90, 100 points or so right now. If we take a look at it, I've blown this up. Its oscillator reading is actually above zero. It is reading 0.17. So we do have a bit of divergence here. I would have anticipated, it still may happen by the end of the day, that the Dow would have been the one that was really giving it up, because it had been weaker. It had been weaker than really the New York Stock Exchange, NASDAQ Composite. But right now, its oscillator reading is above zero. That message is this is nothing more than a retracement. That's what its message is inside of the Dow. So it is not giving you any kind of sell signal whatsoever as we speak right now. You start moving down, you close down 150 points, 60 points, something like that, 160, then I would presume that this oscillator reading is going to go ahead and get below zero. Inside the NASDAQ Composite, it's close. There's no island top or anything out here. It's just slightly below zero. It's reading minus 32. So it really depends on where things finish today for it. But we don't have really uniformity here. Where are we when we take a look at the VIX index? We know that's important for us. Well, it was above the 50-day exponential moving average. It still is. So the S&P, the VIX index by nature of that is saying, hey, guess what? This is where some real carnage could take place. Now, you've got that nice shooting star out here for the trading session of May 19th. You get above that, that's a level that could be or should be resistance, like the bottom of a hammer. Could be or should be support. So what you want to watch with regard to the volatility index is going to be the price point of 1765. You get above that, says you're going higher, says that the markets are moving, has no choice but to move lower out there. Lack of liquidity in the market. Now, what I was also suggesting, let's go take a look at the Dow, see what kind of messages we have here in the Dow, because again, that oscillator reading is above zero. Well, what the Dow has done thus far, it's created a 1-to-1, 1-to-1.618, A to B equals CD to the downside. And it created this candle right here. This came in at, what time was it? At 10:30. So at 10:30, on a 30-minute basis, you had a nice key reversal, bullish engulfing bull sash candle inside of the Dow. That's a Gartley buy pattern that actually formed out here. And as long as the Dow futures do not close below 17,780 right now, that says you could see more bounce. You could see an A to B equals CD to the upside. That would be forming inside of the Dow. When we get back, we'll take a look at some other time frames, some other equity futures contract. And yes, we'll take care of the look at the Russell 2000 for P inside the Tiger's Den. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 98. Let's finish up on the Dow here, or at least two elements that I want to go ahead and show and share with you out here. We're looking at the 30-minute chart. We know that on the 30-minute time frame that we have a confirmed Gartley buy pattern. We know that because what the Dow futures contract did was it made a 1 to 1.618, A to B equals CD. Nice old bullish engulfing candle out here. That says that low that took place at somewhere in that 10:30 hour, which is priced at 17,733, should be support. We'll see if it holds. As long as the Dow, I mentioned on a 30-minute basis, is able to close above about 17,779 right now, that would be short-term bullish and say that we could be seeing higher price out here. If we take it, that's one number to be paying attention to. But if we switch to the daily chart, that's more important. And again, we're looking at the September contract right now because of last night's rollover. If we take a look here, the number to be watching on the daily chart is going to be 17,808. That's the red line that you see on Stevie's chart out here. That's what I've got a workshop coming up. This is coming Tuesday for subscribers. Easy to be a subscriber. Just come on over to the homepage at TFNN.com. We're going to focus a lot of time on the importance of that price level there. Therefore, you can now show you exactly how to calculate it so that you can use it on all of your own personal charts out there for whatever it is that you're trading. It helps certainly eliminate one side of the trade out there. So those are the numbers to be watching. Now, with regard to, I had a request to go take a look at the Russell 2000. So let's look at the Russell 2000 using a couple of different tools out here. Let's look at the futures contract first, if we may. And because the futures contract had rolled over last night, I'm going to the synthetic futures contract that I have out here, which stitches all of them better and actually gives us a little bit different market profiles than if we were to try to just simply use September. I think these are the more accurate profiles, especially to be using right at this specific time. And at this specific time, what we can see here is on the daily chart, prices below the bottom of that daily profile, 1168.50. It would also be below the September contract as well. So it's below that. We know it's a level of support that has been broken. That would say that price would likely head back, therefore, to the 1129 area. Now, what might get in the way, if anything? Let's just take a look at the trend line out here inside of the Russell 2000 futures contract, and you see that red line? That's its trend line. It seems like there's an intersection right at about that 1129 level between the trend line and the top of its weekly box out here. So it would look to me like the message here inside the Russell, and I'm expecting the market. My expectation is that the market gets to a relatively quick overbought status out here. Why would it do that? Because you have most people, they just got to turn on the news out here, that are going to tell you that the market's tried again to get over those highs from 2015 in the Dow and inside the S&P. And they failed to do so, and that's it. Throw in the towel. You know, I hear it from the large firms that are out there and everything. And then I'm just looking at some of these charts saying, what the Sam heck are you getting? You guys are supposed to be the super professionals out there. But what the heck are you actually looking at? I know what they're doing. But let's not go into that piece of the equation out here. Back to the Russell 2000. If I look on a short-term time frame out here, we have an A to B equals CD to the downside. Let's go ahead and put that up on our screen out here. It's a 30-minute contract for you. Price has moved lower. It hasn't done it with less relative weakness or anything, so that pattern is not in play. We've got a 1 to 1.272 A to B equals CD to the downside out here. There is, it says that the support level that you're watching inside here is actually the session at 11 o'clock this morning at 1161. That's an important level that price needs to stay above for the most part. Well, actually, I take that back. You can see price actually has been moving lower over the past couple of half hours. I'm glad that I updated that. So price is beginning to move lower with less relative weakness. And this is in the indice that has really performed the best here as of late. So, and what we should do, we should see how the Russell 2000 is performing against the 1000. Nonetheless, you're still in the trend. The trend is your friend. The price may fall back to that trend line out here. That's what I would anticipate at the moment. Again, that price level somewhere around 1129. Let's go take a look at what's going on inside the ETF structure. See if we get any kind of information out here. Trading out at 116.21, back a $1.46 with volume of 18 million shares. Now, in the case of, here's what we know about the IWM. If we take a look at the swing point that it most recently took out, that was on the trading session. It was April 27th swing point that had 24 million million shares, and it was taken out with 26 million shares. So that was actually confirming an A to B equals C to the upside. In this case here for the ETF, here are its market profiles. And if you take a look at the daily, this says that it's fallen back into the box that formed yesterday. Now, that box that formed yesterday, let me do this. Let me turn off a couple of things so you can see it. You may not have listened to yesterday's show. Let's turn off price. Let's go ahead and turn off the weekly profiles for the moment. And it's the daily that we're focused on. And so price right now is trading with inside that box. What we also know is this box here formed above the prior box. So that is short-term bullish until you see it close below the price point of 114.84. We come back and we turn price on. Where are we trading at right now? We're trading at about 116. What is it? 116.25. Volume today, 18 million shares. I may have mentioned that. Again, 18 million in essence is going into 26. So it seems like it's pulling back. I haven't done the math out this, but kind of in my mind, straight line says you're probably pulling back with about the same type of. So we've been trading for 4 hours. So 4 divided by 18, or 18 divided by 4, you're at about 4 point something, 4 point, say that's another 9 million shares. That would be 27 million. So 26 to 27 going into 26 to 27 million. So it's not as if the IWM is pulling back with volume. Typically, as markets are moving up, the IWM is in the lead, and as markets are moving lower, the IWM is in the lead, especially with regard to whether the small caps are outperforming the large caps. Let's go try to figure that one out here. And as we put this chart up on the screen, what we've got to do here is we just have to say we want the small caps, and then let's go divide it by the large caps. Let's see if the line is going to be up or down. Of course, before I do that, I need to turn this to a line chart out there. And did that actually do the calculation for me? I don't know. Let me see here. I don't know if I kind of screwed that up or not. There we go. There we go. There we go. Let's see. It did. So it has turned down. So that would suggest really the conclusion of price pulling back to the trend line out there inside the market. That would confirm really the New York Stock Exchange. So it does look to me like the markets, even though it's light volume, I think the New York Stock Exchange is going to be one that's going to get to that oversold status the quickest, and that's where we take a look at the market making its next move higher out here. Okay. So if there's any other questions, go ahead and post those inside the Tiger's Den. Hopefully P, the letter P, hopefully I answered your question with regard to our views, what the market is communicating to you and I with regard to the Russell 2000. Now let's go see what do we want to take a look at next out here. So we've with regard to the rest of the markets, the ES Mini, the NQ, all made the same patterns. So if we take a look at prices have completed an A to B equals CD to the downside. In this case here, 1 to 1.618. We've seen the cavalry rush in. The bulls rushed in at 10:30 this morning. Nice old bull sash, bullish engulfing, key reversal session out there. So that low is pretty important. What happens if that low fails, which is 20.86 out here? Well, it says we go to lower price. How much lower inside the ES Mini? Well, inside the ES Mini, we're going to probably have to do this when we get back from the breakout here. But the first place, let's go take a look at that stitched together futures contract out here. Let's see. There's the trend line. It says the trend line, which is probably around the 2074 to 2090 area, 2083. So 2074, 2083, likely the place where price would go back to. Steve Rhodes, TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 115. S&P is down 18 points right now. A couple of requests that have come in. One, if I take a look at gold and silver, which I will, and it looks like Danny in Atlanta would like to look at the euro, I believe. See euro question mark. So let's go with that first here. Let's take a look at the euro. Now, here's what we know about the euro US dollar. We know that it is in a nice little rising price channel out here. Those are designated by the red lines, red diagonal lines on my screen out here. A nice breakout as a test came to the bottom of that rising price channel. That was last Friday, June the 3rd. Big wide-ranging bar to the upside. The bearish candle yesterday that occurred. We can see that the price is below its daily market profile. Danny, this says to me that price is likely on its way back to test the bottom of that rising price channel. That or some type of retracement. That retracement here, whoops, that's an expansion. Let's go ahead and put this tool on retracement mode out here. So we're going to go from the low of May 30th to the high of yesterday. You're below the 0.382 retracement. So it says the 0.618 gets you so close to that rising price channel that looks like 112.19 is in the cards. Maybe it's even a test of the breakout of that candle session, in the 111.65-ish type range out there. So it looks to me like that is what the euro wants to do. If that's going to be the case, what's going to happen with gold? Well, more likely than not, not gold, but the U.S. dollar index, more likely than not, because of the weighting of the euro inside the U.S. dollar index, that the U.S. dollar would continue to move higher, up 53 pennies, trading out at 94.49 or so. That's got a 10-minute delay on it. Now, in the case of the U.S. dollar index, this is kind of interesting here because you can see that it was in a descending price channel, which it broke out of back on May 18th. Price came back, tested that price channel as it should, and since then has moved higher. So it looks like the U.S. dollar index headed higher, at least for the time being, and really the same type of scenario. If we go take a look at retracements out here, the minimum additional move inside the U.S. dollar index should be to the 0.618 retracement level. In this case here, being 94.52, 95.37 would be next, and or it could turn into an A to B equals CD to the upside. No. I'll try to look at all the CFTC COT data with regard to the U.S. dollar and the way that commercials are positioning themselves, because what they have been doing here for quite a while is they have been building to go long the U.S. dollar the U.S. dollar in all types of currencies. This is only a basket of 6 currencies, right? You've got the euro, the yen, the pound, the Canadian dollar, the Swiss franc, and the Swedish krona out there. Well, there's plenty of other currencies where you can see what are commercial traders doing, how are they positioning themselves with regard to the U.S. dollar index, and how they have been positioning themselves has been for a move higher in this. So it's going to be interesting to see how all that plays out. Now, if we go take a look at what's going on inside of Goldilocks, it's up $2. They trade at $12.74. What do we know about gold? We know, number one, that on last Friday it got above Stevie's magic number back then. What was that magic number? I don't recall exactly. It was about 1233, I think, somewhere right around there. Once it got above 1233, it said you cannot be short, that the message was long to neutral. What does that say then? That says that what we anticipate was for gold to go ahead and move up into, let's go ahead and put those profiles into its weekly TAS market profile level. And that says, and we're very close to, we got close to it earlier in the day as it got up to a price point of 1280. That says 1286 was the number. Now, can it go higher than that? Yeah, it can. At this stage here, until we see some type of reversal pattern, or until gold were to close below about 1247, you're at 1275 right now. Until we see that, the message is short-term bullish. Now, I still expect to see that commercial traders, as of last Tuesday, have been adding to their net short position. So their expectation is for gold to go lower. At this stage, if we take a look at just simply retracements from the high to the low out here. Whoops, I grabbed the wrong tool. Let's grab this one. From the high to the low, what we have seen thus far is we're in between the 0.618 and 0.786 retracement levels. So this at the 0.786 is a 1285.20. Oftentimes at those Fibonacci numbers, you can mark the C point of an A to B equals CD. We'll see. We'll know soon enough because the cavalry would arrive and give us a nice bearish reversal signal. Okay, what do we want to go look at next? Hey, light sweet crude. Let's go see what's going on with light sweet crude. Trade out at $49.28 as we speak. That's off $1.28. Looks like this is pulling right back to its most recent. It's got a little Stevie rising price channel out here. It's not really Stevie, but it's on our chart. It's a rising price channel, right? So it's got a rising price channel. We've double guied them by going ahead and creating a second rising price channel that's equidistant from the first one. And you can see that the price is back inside now a daily market profile, and says that price is likely going to head just a little bit lower. No reason for light sweet crude to not go ahead and spike down to hit the 48.14 level. Doesn't have to, but I would say more likely than not that would be the case out there. Whether that holds or not, I don't know. If it does not hold the level of 48.14, then what we're looking at is some further pullback, which could, in fact, be all the way down to $42.63 out there. But its message at that stage, if you break 48.14, is it will have lost its luster to the upside. That is that's Texas tea, right? Black gold Texas tea. I know I can eventually figure it out. Okay, so Dow's off 136. Let's go see where we're at with regard to the chart out here. We're headed towards the lows, but we have not taken them out as of yet. Of course, today's candle at this stage of the game, the island top out here, the anticipation. Let's see if it's the Dow back below. It's price oscillators. Price oscillator now getting below zero. So now jumping in line with the others. And then you've got today's candle, right? We know when we take a look at candles like today that just simply open at the low and continue going lower. Here's the Dow out here. Chances are that they close the session at the low of the day out here, just like back here on May the 11th. Never got above the actual open. And the same thing as it's the exact opposite on days where you open right at the low and continue going higher. So this would suggest to me that you're going to go ahead inside the Dow. The S&P's got the same thing out there. You're going to go ahead and close at the low of the session. Whether that's where we're at right now or continue flush to the downside, that I don't know. But that's, in essence, what its message would be. Okay, so we've got commodities, we've got currencies covered. We've got the longer-term picture covered out here. Let's take a look at some individual stocks, see what they're doing. Let's go take a look at Priceline. PCLN down $19, 1.4% out here. Volume inside Priceline today, 279. 12.29. That's going, well, light volume on the pullback inside of Priceline. That doesn't mean that Priceline won't pull back to 12.99.30, but it's pulling back into its last breakout, which was just a handful of days ago with 842,000 shares to the upside. That is on June 6th. So Priceline pulling back with light volume. Let's go take a look at Apple. Let's see what Apple is doing out here. Today, right now, it's trading out at 98.95. That's back 70 cents with 20 million shares out here. Its most recent low, 40 million shares. Apple, the number one weighting inside the NDX 100. It is pulling back with light volume out here. Let's take a look at Axial Corp. Let's go take a look at some things to the upside. Let's look at Amazon, since that is number 4 to the downside. Let's look at that when we get back from the break. It's down with 2 million shares, down about $11. Let's go see what that is trading into, try to figure out Amazon, AMZN. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome welcome back, folks. Dow's off 161, S&P down 22 points right now, Nasdaq Composite off 66. If we take a look at the SPY out here, here's where prices looks like it's headed to next. And if we take a look at the highs going back to May of 2015, May 19th, was it May 19th? May 19th, May 20th, 2015. We just simply can draw a trend line. That's the green line going across my chart out here. We can see how that really has acted as support. It acted as support in November, acted as support back in April of 2016. That was November 2015. And price broke above it. Really right here on May 27th. So price is coming right now back into that trend line. Volume so far today, 57 million shares. Straight line method, that equates to about 81 million or so. Last time price was in this area on June the 3rd. It was moving higher with 101 million shares. Again, it's summertime, so how do we really benchmark these volumes? If you're going to take a look at that, you'd say it's pulling back on light. The volume, the swing point is back here on June 1st. That's got 70 million shares. Nonetheless, looks like that green line is going to be the first area today. That's priced out at about 209.14 or 209.81, as well as the trend line. That's the red line on my screen going from lower left to upper right. We'll see whether or not that level holds. That is the SPY. The Qs back $1.30 at 108.89, 22 million shares. That equates to about 31 million shares. 31 million shares right now is trading into this thing had started to move higher back on May 24th and May 25th. 38 million shares, 29 million shares. So it's pulling back into that with lighter to maybe a similar-ish type of volume. If we take a look at a trend line here, its trend line coming off of the lows from February 8th, you can see it's got a ways to go before it gets to that trend line area. That actually is not down until about the 106 level. If we look at some TAS profiles out here, let's go see if we can throw those on our chart. Let's do that. You're looking at, this says 108.07 would be the next target, assuming that there is a close today below, I can't read it, below its daily profile of 109.12. So 109.12 is the key number to look at. You close below that, that would suggest moving down to 108.07. You close below that, and you're looking at the trend line being the next spot inside of the QQQ. We already covered the IWM. Let's go look at the Dow Diamonds DIA. It's trading now with 2.6 million shares to the downside. That's the equivalent of about 3.6 million shares out there. So volume-wise, let me see what this is really trading into. Let's pull this back. Accelerating off of yesterday, but as this thing was moving higher, it was about 2.7. So a little bit higher volume than back on May 24th, as well as May 25th out here. You are below the daily low. You are below the weekly high. That should be real key support. So if key support gets broken, that says you move lower. You say, what's that level? 178.80 is the number to be watching. Right now, you are trading out at 178.37. You close back above 178.80. You haven't really broken the back of support out there. And what would that break of the back do? That would say that prices ought to head down to that rising trend line out here off of, I guess we would use that right there. There's your real trend line inside of the Dow Diamond. So maybe it is the Dow Diamonds that give us the first clue, because price is pulling back almost right to it. Not as we speak, but getting pretty darn close. So, folks, have a fantastic weekend, fabulous weekend. Be safe out there. If you get a chance, stay tuned, because our polar bear, David White, he's going to be up next in the Tom O'Brien Show from 3 to 5. Don't forget, get over to the homepage at TFNN.com. Sign up for my workshop. Of course, you get the newsletter service. You get the position size calculator. You get the money management workshop. You get access to me to personally help you through taking a look at some of the stocks that you're trading. So have a great weekend, and I'll see you on Marvelous Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.